Hi everyone, we got fresh earnings out on Johnson & Johnson. Let's do a quick breakdown. Adjusted EPS came in at $2.77, smashing estimates of $2.58. That's a 7% beat and up 2.2% year over year. Revenue also topped forecast at $21.89 billion, up 2.4% year over year. Free cash flow hit $3.4 billion, up nicely from $2.85 billion year over year. Net income jumped to $11 billion, up to 238% from last year. There is also good news for long-term investors if we look at the dividend and 2025 guidance. The dividend was raised by a massive 4.8% to $1.30 per share, with a solid 3.4% yield per year. As for guidance, the company reaffirmed EPS of $10.5 to $10.7 and lifted sale guidance to $91.4 billion at the midpoint. That's up from $89.6 billion earlier. They're also expecting a stronger second half thanks to new product launches. Alright, now let's zoom out and take a look at the bigger picture. How has this stock been performing over the last decade? And where might it be headed next? I used fast graphs to evaluate the stock performance over the long term, and also I will have a look at the short term. This 10 years graph of fast graphs shows you how their operational earning is growing over time. This is shown in the green, which is about 5%. It also shows in orange the fair value ratio, which is 15, and it can be compared to their normal price to earning ratio of 17. In white, you can also see the growth of the dividend. Over the last 10 years, this stock has been a model of stability. The price has followed stable growth of about 5%, and more importantly, the dividend has grown consistently. They've raised their dividend yearly and it's now yielding 3.4%. Currently, the stock is trading around 15 times earnings, which aligns with its 10 years fair value range, which is below their normal PE of 17. At the bottom right of this graph, you can also see the estimate earnings for 2025, 2026 and 2027. You can see that it is in the range of 5 to 7%. The nice thing about fast graphs is that you can look at different time frames. So let's have a look at the 4-year chart. On the top right in the 4-year chart, you can see that their growth has reduced to 1.69%. Their fair value ratio has reduced to about 12 times, and their PE has slightly dropped to 16.29 times. If the estimates for the next few years are correct, it is likely that the stock will follow these earnings and grow over time. So, is this stock a high-flying growth stock? No. But for long-term investors looking for a stable compounder with safe dividends and a dependable growth, it looks rather interesting. If you find this helpful, hit that like button and let me know in the comments if this one is on your watch list. Subscribe for more stock deep dives and long-term investments insights.